Hi guys, this is Mr. Ibrahim the trader of Gova Trading Academy. So in today's video, I'm going to be
Good
showing
evening, sir.
you some things on the weekly zones.
Okay.
So, but there's an explanation I'm going to be making on the weekly zones. Let me use the calendar. All right, so for those who are asking me the question about what to do if Friday or Thursday is the only day we analyze the market and so on, now this video should answer your questions. So let's say, for example, we have a sell trade alignment. Let's say in a sell trade alignment, let's say the blue line is up. We all know in a sell trade alignment, the blue line is usually up. So, and we all know that if the blue line is up, then we are expecting the green line to be below. We are expecting the green line to be below. But remember, if we are trying to analyze what is going to happen next week, we don't usually mark out the equilibrium line physically on our charts. We usually mark out the equilibrium line at the back of our mind. So, for example, let's say market is about to close. Let's say market usually close 10 p.m. and it is currently 9 p.m., for example. So you see, it remains 1 hour for market to close. So that 1 hour that remains for market to close, you still have the opportunity to analyze the market of what is going to happen next week. But you won't be able to mark the equilibrium line yet for next week, because next week has not yet happened until Monday opens. Until the market on Monday opens, before you can mark the equilibrium line on Monday. So what we can do is, if we see market price, for example, around here, you see that this is where current price is, where this red dot is. Where this red dot
That green dot.
is where the current market price is. Mr. Yusuf, please don't say anything, okay? So let's say this is where the red dot is. Now on this red dot, you see that it remains few hours for market to close around here. We have just few hours left for the market to close, because remember, this is the period separator of the day. This is the period separator of this Friday. So on that period separator, you see that market remains just few hours to close. So the few hours left for market to close, we can clearly see that the blue line is far above, and the green line, even though we don't know where the green line is going to be on Monday, where the weekly equilibrium line is going to be on Monday, we roughly understand that the equilibrium line on Monday is going to open anywhere around the period separator here, anywhere around the period separator, anywhere. So automatically that qualifies to be a sell alignment. So in a sell alignment, after we determine what the alignment is going to be on a lower time frame, then we switch back to the D1 time frame. Now on the D1 time frame, let's say, for example, remember guys, on the D1 time frame, we are only looking for a bearish candle, since this is a sell alignment. So let's say, for example, we saw this type of candle on Friday. Let's say we saw a bullish candle on Friday. And then let's say, for example, we saw a bearish candlestick on Thursday. But you can see this bearish candlestick we saw on Thursday is looking like a square. So it is not good. So let's say we saw a bullish candlestick again on Wednesday. Again, let's say we saw a bearish candlestick on Tuesday. Now, the bearish candlestick we saw on Tuesday is a very good bearish candlestick that looks like rectangle in shape. Now, what does this mean? This means that we are going to be taking the supply area of the bearish candle we saw on Tuesday, which means we are going to be highlighting the area. We are going to be highlighting the supply area of the candle, and then we are going to wait for price to come back into our zone. So you guys can see that we saw the zone on Tuesday, but we didn't take the zone on Wednesday. We didn't take the zone on Thursday. But we can see that on Friday, market price was approaching our zone. Or let's say, for example, we saw a bullish candlestick on Wednesday. Let's say we saw a bullish candlestick on Wednesday. Now, this bullish candlestick on Wednesday, if the bullish candlestick on Wednesday is approaching our supply zone of Tuesday, I won't make this type of market our supply area. You understand? I don't like seeing a candle going in to trigger my trade immediately like this. You understand? So what I like to see is if the candle is getting triggered, then that is not going to be the supply of the new week, of the next new week that is coming. So it means if this area has already been triggered, then we don't consider that area anymore. It means we are going to be waiting for the true supply area. For example, the true supply area might come in on Friday, because we might have another bullish candlestick on Thursday. We might have another bullish candlestick on Thursday, and then we might see a bearish candlestick on Friday. So now the bearish candlestick we are currently seeing on Friday, which looks like a rectangle, it means this is the candlestick we are looking for, which is going to serve as the supply of the new week that is going to come. So what you have to do is mark out the supply area of the candle, highlight the supply area of the candle, and then you wait for price to come back to the zone on Monday. You wait for price to come back to the zone on Monday, and market price is going to trigger and drop down. So this is another scenario. What if we have another scenario? Let's say, for example, this is another scenario here. Let's say the candlestick on Tuesday is a bullish candle. The candle on Wednesday is also a bullish candle. And let's say, for example, the candlestick on Thursday is a bearish candle. Let's say the candlestick on Thursday, guys, is a bearish candle. Now, this candlestick that is on Thursday, which is a bearish candle, are we going to take this trade right now? The answer to this question is no. You cannot take the trade right now on this candle. Before you can take the trade on this bearish candle, you have to wait to see what candle we are going to have on Friday, because Friday might also give us a bearish candlestick. We might see another bearish candlestick also, a good bearish candlestick on Friday too. You understand? Now, what are we going to do? What we are going to do is we are going to highlight the supply area we saw on Thursday. We are going to highlight it. After highlighting it, we won't enter the sell limit and stop loss yet. We won't enter it yet. What we are going to do is we are just going to highlight it down. You understand? After highlighting it down, then we wait to see what is going to happen on Friday, because on Friday we might see a bullish candlestick on Friday, or we might see a bearish candlestick on Friday. So what if a bullish candlestick is what we see on Friday? Let's say we saw a bullish candlestick that opened, and the bullish candlestick is gradually approaching the supply area of Thursday. So if we can see that the bullish candlestick is having a very good body like this, which is currently approaching our zone on Thursday, you can see the bullish candlestick is trying to approach the supply zone that we have on Thursday. So whenever you see this happen, whenever you see this is happening on your charts, and the candlestick, the bullish candlestick is having a very good body, which means it cannot turn into bearish candlestick yet. You understand? This candlestick can no longer turn into bearish candle anymore. It is going to stay positive as a bullish candle. So it means this candle, we are expecting this candle to come into this zone trigger the supply area of Thursday, and then we should see market price dropping down into the next week. We should see market price dropping down. That is how it works. So let's say, for example, towards the ending of the week, we saw a supply zone on Thursday. We didn't enter the trade yet. However, we already analyzed the trade. We mark out our proximal line, distal line on the trade, but we didn't enter our sell limit yet on the trade on Thursday because we are waiting to see what is going to happen on Friday. And on Friday, towards the ending of Friday's session, what we saw was a small bullish candle. What we saw towards the ending of the Friday session is a very small bullish candle that looks like a square. Now, this small bullish candle might turn into a bearish candle on Monday. If market opens on Monday, this bearish candle can turn back into a bearish. It can turn back into a bearish candle. So, and the bearish candle can give us a very good body on Monday. So it means that the Thursday zone is not what we are going to be focusing on anymore. What we are going to be focusing on is the new bearish candlestick we can see on Monday. So this doesn't mean that we don't usually take Monday zones. You can see right now we have a zone last week Thursday. Market did not trigger the zone last week Thursday. We saw a zone, a bullish zone on Friday, but this bullish zone has now turned into a bearish candlestick on Monday. The Monday I'm talking about is this Monday here. It has turned into a, let me go and mark it on Monday. So let's say we saw a bullish candlestick on Monday, a bearish candlestick on Monday. So you can see Friday gave us a small bullish candle, but market did not trigger the zone and the market price dropped down on Monday. Now, the candlestick that dropped down on Monday, let's say this is what we saw on Monday here. So on Monday, we saw market price dropping down. Now, you can see that Thursday did not trigger. The market on Thursday did not trigger because this bullish candlestick did not go into our supply zone on Thursday to trigger it. What we saw next was another type of bearish candle, another type of a good bearish candlestick formed on Monday. So if you see a new bearish in a very good bearish candlestick again, then you need to take it. You need to highlight, you need to highlight the zone. You need to highlight the supply of that zone. Even if it is Monday, you need to highlight it. When you highlight it, then you take the trade. Okay, you take the trade. Highlight the supply area of the Monday, and then you take the trade. And then you expect price to come back to the zone, and that is going to serve as the weekly supply zone of that week. That is going to serve as the weekly supply zone of the week. Now, let me show you guys this same example on Euro USD charts. On Euro USD charts. Now, on Euro USD chart, let's go to the charts now. All right, let me quickly set up my Euro USD charts.
Good afternoon, sir.
Yeah, good evening. This is evening here. All right, now the example I'm going to be showing you guys is on Euro USD, Euro JPY, USD JPY, AUD USD, AUD CAD, Euro NZD, AUD NZD. Now, please don't say anything yet. Let me just continue. Now, in the professional course, the first thing you need to do is to switch to the D1 time frame. Now, switching to the D1 time frame, you need to mark out the monthly equilibrium line, which is the blue line. You need to mark it out, which is a blue line. change this green line to a blue line, and then always lock your line, always lock it, always lock it. I see people marking out their proximal line, distal line. I see people marking out their proximal line, distal line, and they are still not locking. You are still not locking the dots here. Make sure you double click on the dots to make it disappear. Always lock it, because if you don't lock it, it means you can see you need to lock it. Once you lock it, that is okay. But if you leave it open, it can move to another, the line can move to another place. So always lock it. All right, moving on. This is the monthly equilibrium line here for Euro USD. And remember, I'm marking my monthly equilibrium line because this is the bearish candlestick we have on the period separator here. And on this period separator, remember, the opening of the bearish candlestick is where we usually mark out the equilibrium line. So you can see, let me zoom it out a little bit more. You see, I mark my equilibrium line as the opening of this bearish candle, the candle that is on the period separator, the candle that is on this period separator. So whether the candlestick is a bullish candlestick, it doesn't matter. The color of the candlestick does not matter. What matters is just go and mark your equilibrium line as the opening of the candle. Even if you are taking a sell trade and you see a bullish candlestick there, it doesn't matter. Just mark it out. Now, that is it on my monthly equilibrium line. The next thing I'm going to do is I'm going to mark my weekly equilibrium line. Remember, guys, I'm trying to analyze the weekly trade, not the monthly trade. The monthly trade is already over because we usually analyze the monthly trade at the beginning of the month. We analyze the previous month to know what is going to happen in a new month. But right now, I'm trying to analyze the weekly trade, which means I'm trying to analyze what happened this week to know what is going to happen in the markets next week. Now, let me mark my weekly equilibrium line by switching to the H3 time frame. Now, on the H3 time frame, this is what I can see. You can see where current price is right now. You see where current price is right now. You can clearly see that market has not closed yet right now. This is the period separator. So market is still currently on this candle here right now. So, but what can you see? I can see that monthly equilibrium line, the blue line is up, which means the green line is going to be anywhere around this level when market opens on Monday. The green line is going to be anywhere below this level here, anywhere around here. You might not know exactly where it is going to open, but what we know is the blue line is up and the green line can be anywhere below, and anywhere below is still going to be a sell alignment. So it means that at the back of our mind, we already know what alignment we are going to have next week, even though it has not yet happened. We already know the type of alignment we are going to have. We are going to be having a sell alignment. So after you have this understanding of what the alignment is, then the next step you need to take, is to switch back to the D1 time frame. Switch back to the D1 time frame. Now, when you switch back to the D1 time frame, and if your candlestick is like this, zoom it out a little bit. Zoom it out like this. Don't zoom it out too much. Just zoom it out a little bit like it is okay like this. Now, once you zoom it out, what we are looking for is we are looking for a good bearish candlestick that has a good body. Now, you can see this bearish candlestick here does not have a good body. This candlestick here does not have a good body. So which candlestick has the good body we are looking for? The candlestick that has the good body we are looking for is this bearish candle here. So what we are going to be doing is we are going to be highlighting the supply of the candle. Remember, guys, I told you that the supply of the bearish candle is anywhere from here to here. Anywhere around here is the supply of the bearish. So our yellow zone can be sitting anywhere around that area. So the next thing you need to do is highlight the supply of the candle using your proximal line, distal line. And remember, I told you whenever you are highlighting it, don't highlight it like this. Make sure you highlight it by putting the three dots on the wicks. By putting the three dots on the wicks. You might ask, what if the candlestick does not have the wicks? What if the candlestick does not have wicks? Well, if the candlestick doesn't have wicks, then you can mark it like this. Let's say, for example, we are analyzing a buy trade. You can then mark it like this. You can see this is a bullish candle. This bullish candle right now, you can see this bullish candlestick does not have wicks below here. So if you are taking a buy trade and the candlestick does not have wicks, just mark it, just put your yellow zone as the opening of the area, just like this, just like that. So you can see your yellow zone is still on the demand of the candle, on the demand side of the candle. But this is a sell trade I'm trying to take, not a buy trade. So I'm just going to put my yellow zone around here. Now, the next thing you need to do after highlighting your yellow zone is to switch back to the lower time frame. Switch back to a lower time frame. Now you can see when I switch back to a lower time frame, this is the condition I can see. I can see that the formation I have is this. You can see the formation you have. Now, on this formation, you need to mark it out properly, because right now you can see the proximal line, distal line right now is not currently marked properly. It is not marked properly. So you need to mark it out properly in a more proper way, the way we usually mark out proximal line, distal line. So switch lower to mark it out in a more proper way. So this is the zone. The trade has already triggered already. You can see the trade triggered here and is currently moving down. It is currently moving down. So that is it on the analysis here on Euro USD, Now, there's another example I want to show you guys, which happened to me this last week. So let me show you guys. There's a zone here. Hold on. All right, so this was the zone. I had two zones marked. I had two zones marked out in the area. I have this zone marked out. I have this first zone. Let me show you guys. You can see this is the bearish zone I have. This is the first bearish candlestick I saw last week. So what is the date on this bearish candle? Let us check the date on this bearish candle. You can see the date on this bearish candlestick is, look at the date below. You can see the date below on this candle means this is 11/08/2023. 11/08/2023. Now, what is 11? What is 11/08? Let's go back to our calendar and see. Let's go back to our calendar and see what is 11. You can see, going back to the calendar, you can see 11 is on what? 11 is on Friday, which means last week Friday, I was able to see a very good bearish candle. A very good bearish candle. I saw a very good bearish candle on Friday. After seeing the good bearish candlestick on Friday, what did I do? What I did was I marked out the supply of the bearish candle. I marked out the supply of the bearish candlestick, which is, I did something like this by marking it out, because I was expecting price to come back on Monday. I was expecting price to come back on Monday to trigger that supply area and then move down. So that is not what happened exactly. What happened exactly was, after seeing the supply area, there's another supply area on Monday. Instead of market price to go up on Monday, because the candlestick is on Friday is bearish, so the market on Monday was supposed to be bullish, which means bullish means I'm expecting market price to move up into the zone with a bullish candle and trigger the zone. You know, this bullish candlestick is going into the supply area to trigger the level we have here. But that is not the case I saw on Monday. What I saw on Monday was I happened to see another bearish candlestick on Monday, which is on Monday 14th. Monday 14th. I happened to see another bearish candle, a very good bearish candlestick also on Monday. So what did I do? With my experience, what I did was I again highlighted the area I saw on Monday, because you need to be following the new information you are seeing in the market. Now I highlighted the supply area of Monday, which means Monday candle is what is going to be the supply of the week. I highlighted the area, and then market price came back to my zone and gave me the profit I'm looking for. It is as simple as that. Very simple. Now let me show you on the charts. Now going back to the charts, you can see that the zone on Friday, this is the candle on Friday, and remember this is the candle on Monday. So instead of seeing a bullish candlestick on Monday, I saw a bearish candlestick again on Monday. And you can see this bearish candlestick I saw on Monday is also a very good bearish candle. Remember, Monday is 14, right? So this is it. You can see the dates here on the candle, 14. So when I saw the bearish candle that is very good, what I did was I highlighted the zone with my proximal line, distal line. I highlighted it. Let me highlight it again. So let me highlight it. So after highlighting it, remember, as at the time of my analysis, this area has not happened yet. Market has not come back to trigger the zone yet. So what I just saw was that I saw that my candle on Friday was not triggered. It is fine. I move on with the latest information I can see on the chart, which is Monday bearish candlestick. I cannot ignore this Monday bearish candlestick because it is also a very good bearish candle with a very good body, which means there's an imbalance on this candle, right? There's an imbalance on this candle. If a candlestick, whenever a candlestick looks like a rectangle, there's usually an imbalance on the candle, okay? Now, after highlighting the candle of Monday, then I switch back to the lower time frame. When I switch back to the lower time frame, this was the zone I saw. You can see this is the zone on a lower time frame. Look at it. Rally based drop on a lower time frame. Let me switch to a lower time frame again so that you can see the formation more clearly. You can see this is the zone here. Let me switch back to a lower time again. Now, whenever you are switching to a lower time frame, always switch from time frame to time frame. Don't jump from H3 to H1 or from H3 to M30. No, you have to be doing it one after the other. H3, the next time frame next to H3 is H2. The next time frame from H2 is H1. The next time frame from H1 is M30. So don't jump. You have to do it one after the other, one by one. So from H3, I look at H2. If I'm not seeing what I need to see, I go to H1. Then on H1, I can see what I need to see because I can see that this is the area on H1. This is understandable enough for me to understand that this is what is happening. And I can see the formation I'm looking at clearly on this H1 time frame. I can see that on the H1 time frame, this is the basing candle. Remember the basing candle, guys? Remember I told you guys that basing candlesticks are small candlesticks forming in your zone. Remember, this is a rally-based drop formation, rally-based drop formation. On this rally-based drop formation, remember, it says that in a sell trade, you need to mark out your distal line at the highest point of the base. And you need to mark out your proximal line as the opening of a bullish candle. So this is the bullish candle here. Can you see? This is where I'm going to mark my proximal line. So if I mark it like that, you see this is how it is going to be. Market price came here and triggered the zone, and the market price dropped down. You see, this zone serves as the supply of this week that just ended. So you can see this is the zone. Marking it like this, you need to mark it like this, and then highlight the area with your yellow box like this. So remember, guys, I told you not to highlight your zone like this. This is too much. And don't highlight your zone like this. This is not how to do it. Make sure your yellow box is inside. And also, whenever you're highlighting your zone, don't highlight it like this. Don't do it like this. This doesn't make sense. If you do it like this, it doesn't make sense like this. Just do it like this. It is okay. Your three dots should at least be very close to each other like this. Okay, like this. It is okay. Sometimes I usually do it like this, sometimes in a straight way like this. Whatever you want, but don't do it like this. This does not make any sense. Okay. All right, let's move on. So let me highlight the zone. This is it. Now highlighting it with my yellow box to mark the area as my area of concentration. Now also remember, you need to always double click on the line to lock the line. Very, very important. Now after locking the line, remember on Monday, this market has not played out yet on Monday. So it means all these areas has not happened yet. All these areas here has not happened yet. It means after seeing the supply zone on Monday, remember the supply candle we saw on the D1 time frame on Monday. Markets came back to that supply zone on Tuesday, because remember this is Monday here. Remember we saw a supply zone on Friday. This was the supply zone we saw on Friday, this one here. Let me switch back to the area on Friday again. So please, whenever this Zoom ends, join back again. I'm going to be explaining some things to you again, guys. So this is the candle on Friday. This is the candle on Monday. Now you guys should be able to see the two zones. You see, this is the Friday zone here. This is the Monday zone. However, Monday triggered on Tuesday. The zone on Monday triggered on Tuesday. Friday zone did not trigger because we saw another bearish candle here. So market triggered here and gave us the profit we are looking for. That is it. Okay.